Hello everyone, Mark Avari here with a Rate Watch report. Sorry, no musical introduction. I changed some setting on my computer and I can't figure out how to change it back. But in any event, here's where we're at with our technical chart. A week or so after our drop in the mortgage-backed security market, which increased the rates after this big run-up that we had latter part of November. Before we kind of look at these technicals a little further, let's just kind of look at some of the fundamental news that have coming out. The other day, the Treasury mentioned that they're going to be extending the TARP and the TALF possibly into October of next year. The TALF is the consumer lending portion of that program, and it could translate into something that was indicated last week when Bernanke testified before the Congress, that this could be into an extension and more of a buy into the mortgage-backed security market, which that's kind of something that I'm thinking could possibly, and if that's the case, we could be in for a nice rally. So those are kind of something that's going to be helping the rates go down. Rates going up in that column. Wholesale inventories were up, not down as predicted, and so that's probably something on the fundamental side that could be bringing the rates up. But I don't think it's any too strong one way or the other on that. But getting back to our technical chart, what I've done here after our big our run up and then our subsequent fall is to kind of now took some of these charts in some more detail to see where we're at as relative to a trade. And as you can see here on this 4% coupon, here again, this is our big run-up that we experienced when we had the lower rates a couple of weeks back, and then here's our big fall down. But if you can look, we're kind of gotten into this trading range of 99.6 to 99%. And one of the things interesting that tells you, if you look at these charts further, is we've had this trend line here going, as you can see, this arrow pointing up and then this arrow pointing down. I don't know if there's a technical term for it, but if you look at it, it does sort of an arrow, and that does sort of give an indication that this is our trading range until any move one way or the other, which more than likely would be dictated by some fundamental analysis, fundamental changes, is probably going to be the trading range that we're going to be experiencing a sideways market for some time. So kind of when you get to the top of this, you may want to lock. When you get to the bottom of it, you may want to float, excuse me, and anywhere else probably player's choice, if you will. So I think this is kind of the sideways market that we're going to be seeing some time until again we have some fundamental thing that would change it. Because you look at these charts and that kind of shows exactly where it's going. And to drill down a little further, what this this blue line here is the 10-day moving average, and this is the 30-day moving average. So that actually probably reinforces that argument just a little bit more as we bring up our rate watch tool here. You can also see it in a little probably clearer. 30-day average here. 10-day average here, 30-day average here. So that looks like this 99.6, 99 point is our trading range. How our lenders are reporting in this morning, of the 87 that we have reports from, 75 are showing probably some negative pricing on rates today. 12 of them changed, but as we look at our day watch report, it's kind of a little bit of up and down all day, and I don't think you're going to see any huge gyrations. But this looks like to be the trading range for a while until we get some more movement. Thanks for watching. Take care, everybody. Bye-bye.